Hi everyone, Andy in Business Development at Mortgage Heroes, and this is Monday Mortgage Minute. Well, last week was certainly crazy. I feel like I've said that for 2 or 3 weeks in a row, but last week has to be the craziest. With all the stimulus package back and forth and eventually getting that to completion last week, the announcement of forbearance programs, mortgage servicers being under pressure, last week was probably one of the wildest weeks I've ever seen in the mortgage industry. So let's talk about a few things and we'll talk about what we think is coming up ahead. So first and foremost is stimulus package finally gets approved. Everyone saw this all over the news, and everyone that I know is already starting to look at, well, what does that mean for me specifically and how can that help me? One of the biggest things that relates to our industry is the mortgage forbearance program, where you can actually suspend mortgage payments for a certain amount of time. Now, one of the things I want to remind everybody is that just because a headline says something or a title says something, there's always details underneath that. So what's going to be really important is that if you are watching this and you're in a situation where you may need to take advantage of mortgage forbearance due to loss of job, hours cut, or you can't work from home kind of situation, or anything else associated. It even includes if you had to stop working to be home to take care of kids that you don't have care for, or of course they can't go to a care center because that place is closed too. So if that is the cause of why it is you need to suspend your mortgage payment, the action point for you is to call the mortgage company you make your payment to. Now, that's really important. Look at the bill you get, whether it's electronic or it's a paper bill. There's a customer service line on that bill, and that's who you're going to need to call to tell them that you would like to apply for the mortgage forbearance. Now, when you're applying for the mortgage forbearance, it's really important that you understand clearly what they're asking you to do. I've already been seeing reports over the weekend that some of the mortgage forbearance programs are going to allow you to delay payments for 90 days, but when that 90 days expires, you're going to owe all of that money plus the current month that's due. Also, I'm hearing reports that the months you miss could be tacked on to the end of the loan term, but that's more of a loan modification. So this really comes down to a couple of things. It comes down to what is the pressure point of your inability to pay, matched with who is your loan servicer and who you're calling and talking to, and what kind of forbearance program they fall under the guidelines of based on the stimulus package. So to be as helpful as possible when you're calling them, it's important to be patient. You could be on the phone for a while. They're going to be fielding hundreds of thousands of calls, I'm estimating, in this week and for the weeks to come. So be patient. Be prepared to answer questions about why it is you're qualifying, what your financial stability is or instability is, and what you might be able to do to avoid having to be in forbearance. And then the other thing is listen very, very carefully to what kind of terms and conditions they're asking you to agree to. You want to make sure that it's clear and that at the end of this 30, 60, or 90 days of forbearance, you'll be able to perform on the thing they're asking you to perform on. So that's really important. Now, if you're in a position where you can just kind of ride the tide and you can continue making that payment every single month and you don't have to do this, that honestly is your best bet. Now, I'm not saying I understand your financial situation and that's the best use of your money, but I'm saying that if you do have some cash reserves and you're able to continue making your payment for the next several months while all this kind of settles out, then you're going to probably leave yourself in the best situation so that you don't end up with some sort of term agreement with your lender at the end of the 30, 60, or 90-day period that you're asking for. If you have any other questions about forbearance, you can leave a direct message and I'll do my best to answer it, or you can reach out to me by email and we can handle it that way. The next thing I wanted to talk about is something that happened behind the scenes. You know, the headlines all week long were coronavirus, and underneath that was so much activity happening in the finance industries. It was just incredible. One of the things that was an unintended consequence of the Fed's participation in the mortgage market was as they dumped billions and billions of dollars into the mortgage-backed securities market last week and bought treasury bonds, it actually created pressure on some of the servicing companies and the mortgage investors that create loan money to give to active duty military and veterans that we do right now. And because of that pressure, it had an unintended consequences that rates were like sporadic and all over the place, or in some cases not even available. And they weren't available because the banks we rely on to originate loans and give money to people like you and I are the same places that are underneath financial restrictions from the Dodd-Frank Act back in 2010 that came out of the last financial crunch, that they have to have certain cash reserves. But those cash reserves come under great pressure when people are refinancing so rampantly out of the pool of loans that they're servicing. And so they have to keep this like minimum requirement of cash reserves on hand. But when there's a run on refinances, that puts that under great pressure. And some of these people are paying tens of millions of dollars a week just to keep their doors open. And so one of the things that happened last week is that one of the brightest voices in our industry, Barry Habib, wrote a letter, which eventually ended up getting to the Fed, explaining what the unintended consequences was. And over the weekend, they actually, late on Sunday night, were able to announce that they're going to curb some of the dumping of money and buying bonds, because it had actually created a very tumultuous situation that they did not intend to have happen, and it created a lot of volatility in the rate market, which means that it was difficult for people to fund and close loans. So what we think is going to happen is this week and next week, things should start to smooth out. Things should start to calm down in the mortgage industry so that we see consistency of rates. But what's going to happen is, as this rebalancing act happens, I think we're going to see low rates for weeks and months to come. Now, we already called this at the beginning of March, but we did not expect this unintended consequence to happen when the Fed dumped all this billions of dollars into the market. We didn't expect that it would create this other pressure point. Now that this other pressure point can get relieved, we're expecting that rates are going to remain relatively low for the weeks and months ahead. The next challenge, as I see it, is going to be how we qualify folks who have had minimized hours or loss of job due to coronavirus closures and stay at home or shelter in place orders. That is what I think is going to be the next crunch point, and I don't know what that's going to look like yet. I'm only bringing that up because if those of you who are looking to refinance are still employed, you're gainfully employed, you have not had your hours cut, you're still working full-time or the same amount of hours you normally do, this will still be a good time for you to take action and refinance, or maybe even take a look at that next purchase. But I can't sit here and honestly tell you that I know what's going to happen with income qualification if you have had a hit to your income due to shutdowns of your company, social distancing, or you can't do your work from home, like you're a dentist or a barber or a hairstylist, that kind of thing. So that's the next thing we're going to try to get some clarity on and bring back to you guys. If you have any questions that you think we can help you with, please reach out to us. We rode through the collapse of 2008 and 9. And one of the things I wanted to tell you actually is that happened over a course of months. I remember September 2007, banks started closing. But the real pinnacle of this wasn't until October of 2008, which was 13 months later. Everything that we're dealing with right now happened in this 3-week period of March, and it was just crazy. So the speed at which this thing unfolded this time was just unprecedented. So we're doing our best to get through it. We did it. We got through it last time as well. So be patient with us. We'll be patient with the process, and we'll continue to bring you good value and accuracy when it comes to how we can help you navigate through these times. Thanks again for watching, and we'll see you again next week.